Support for Short Stops is presented by the Caylum Trading Institute. Check out our website at www.cayluminstitute.com. On today's episode.
But at those junctures where irrational liquidation comes, when they're looking at their portfolios, they will say, "Nah, I can't handle this kind of loss anymore. Just get me out and I just have to sell at any price whatsoever." And those are the ones where irrational liquidation really happens.
Call it what you want, a game, an experiment, a gamble. But stock trading in the global financial markets to us is a business. Every day you're surrounded by the noise. Buy, sell, hold, buy more. And we're going to quiet it down and filter out the best trading strategies, tips, and stock picks. You want information on how to find your next bagger or home run? You'll find it right here on Short Stops.
Hi everyone, welcome to episode 15 of Short Stops. And today's topic is all about picking bottoms. And one of the biggest questions is that as trend traders, do we pick bottoms? So with me today is Lawrence Lee.
Hello.
And so my dear brother, what do you think about picking bottoms?
Yeah, so it's always been something that's been discouraged from Caylum because of the degree of difficulty that presents itself at these times.
What is that difficulty?
It's just that nobody knows where the bottom is. Our dad always says, our dad, "Kung alam ko lang, mayaman na ako." The biggest thing here is that everybody wants to participate because everyone thinks that because this sell-off is presenting itself, there's such great value that is happening. So there's some semblance of disparity, and everybody wants to see if whether or not they can capitalize on it.
So it's a matter of expectations in that sense. So it depends on your trader profile. So if you have longer term or more like investing, then it would make sense on that end.
Exactly.
But for short-term traders,
this is not something that you really want to be looking at because everyone believes that when you're buying something, it's potentially be the bottom. But how do you know, right? So one of the things that people ask us is that, okay, since we don't encourage reversal trading in general or picking bottoms, why do we even talk about it? And the thing there is that, especially for us growing up, the analogy that we use all the time is that we were always taught how to gamble when we were younger, but we were always discouraged to do it. The reason why we have to teach this is because if you're not aware of what is going on today and you just dive in straight on, you won't really realize what you're really getting yourself into. But we needed to learn how to do it so that in the event that when we were growing up, we were in a situation that we ended up gambling and we didn't realize what was going on, we'd completely get sucked into it. And now in our situation today, in terms of reversals, we don't really encourage you guys to do it. We really, if you guys can avoid it, all the better, right? You just step aside and wait for markets to finish. Markets will finally reverse and present entry points in terms of trend trading one day. But for those of you who are actually dabbling in the reversal trading today, we have to give you guys some tips and pointers to see whether or not you can actually participate in it.
So we have to determine whether this irrational selling that is happening, meaning is it a temporary bounce?
Yeah, normally.
Don't you assume that everything is a temporary bounce?
Exactly. You have to assume everything's a temporary bounce for the meantime. So normally all these things are rallied to primary resistances. So whether that's a 50-day, whether it's your downtrend line. Normally it's all the individual irrationalities. So it's essentially reversal to the mean, right? So mean is whatever the moving average is normally what the mean that you use. So all of this is irrationalities and extensions, significant disparity from the mean.
And just to clarify lang, it's either the 50-day EMA as your initial resistance or the
downtrend line.
The height of the downtrend line. The resistance of the
downtrend line. So sometimes you can see significant irrational liquidation that can be up to 15-20% away from that downtrend line, right? So normally everybody uses 20% from the 200-day as a means of saying you're irrational at any given point in time. So upside and downside, right? So if you're 20% above the 1 year average, it means that you're probably in extended territory. Whereas on the opposite side, if you're 20% below that level, it means that there's irrational liquidation on that front, right?
But we've seen stocks, for example, like SurePass, CHP,
SSI,
right? Even the casinos before, MRP, Bloomberry. And you saw that irrationality, but what happened was that it became rational in a sense.
Agree.
How do you find out that this irrationality is actually irrational versus something
Normally, the easiest way to find it, well, the easiest way to find it by far is if the markets are not selling off and your individual stock is selling off, that's the easiest one to find. So that means that fundamentally there's an underlying problem that's in place. And that's the reason why you don't want to be there, because the whole market is strong and there are other options for you to buy. And these are the ones that have problems and those are selling off. Now, the ones that you're talking about that are irrational today that can potentially be rational, normally those are core fundamentals is what you really have to look at. So if you're talking about irrational liquidation today, we're assuming that the irrational liquidation today is happening because of the liquidation across the board from the market. And now what you have to look at is say, okay, do these individual stocks actually deserve to be trading at these levels, or it's super cheap at these levels?
So normally we classify stocks based on three things on these sell-offs, whether one, it's market-driven, two, it's fundamentally driven, or three, it's event-driven sell-offs.
Yeah.
So in most cases, what you're saying is that if it's a fundamental-driven sell-off and you're seeing irrationality, it may be something
that could prolong.
Yeah, as opposed to something that's being sold off because the market's being sold off.
Correct.
Okay.
Everything boils down to fundamentals anyway. So if anything that's selling off and you have underlying fundamental problems with it, immediately it's something that you have to step away from, because these guys can sell off and actually won't bounce. So the reason why you're actually buying these irrationalities is because you're trying to get some semblance of bounce from these guys, and this bounce could be significant. So if you're looking at it on that front, exaggerations, so we use ADX normally to find exaggerations, ADX above 50, ideally above 60, right? So using ADX is a measure of the specific strength of any form of magnitude. So when you're looking at that, normally when you're saying the ADX above 50 or ADX above 60, it means that 50 or 60% of the time, the magnitude downwards is greater. So in that sense, it's something that's probably not sustainable over time, especially if these guys go above 70. So if you saw the Dow Jones earlier in the year, ADX was above 70 on the upside. That means that it's something that definitely is not sustainable. So you've seen that the aftermath of that is that the sell-off actually came directly after that.
There are four stocks right now that are ADX above 50 in our list especially. So there's GDCap, Cebu Pacific, ICTSI, and Metro Pacific.
Yeah.
So are these all classified as market-driven sell-offs, but the market hasn't fully sold off yet?
Yeah, so these guys are coming down much earlier than the market. So the market it's still relatively rational selling. If you're talking about these four guys specifically, it means that there's an excess exaggeration that's coming in. So if you notice that MPI a week ago basically bounced already, the thing there is that normally these bounces are temporary, right? So the initial bounces after the scare bounces directly onto the short-term EMAs, because a lot of people still are losing money at this front. So there's no guarantee that it's actually going to bounce and head into let's say even up to 40-50% of where it came from, right? So you really still have to expect that there's still going to be downward pressure coming from people who are continuously losing money at this point. It's still more important to say, okay, today I'm not going to use my technicals to be buying at this point, because the technicals are just telling me that everyone's losing money. So what you have to see is, okay, in terms of the fundamentals, now I want to say, okay, is it good value already today? What's it really worth? Is the potential earnings of this guy disappear, or is it still valid, right? So is it worth the price that it's selling at today, or it's significantly cheap at this level? So those are things that you really have to look at.
Okay, but when you're seeing these irrationalities, normally people always talk about divergences. They're looking for some form of divergences.
Yeah.
And especially if you notice about those four that I mentioned, plus the index, you'll notice that these sell-offs actually have, whether it's divergences in your MACD,
Yep.
RSI, DMI, or in whatever indicator that they're using. What does that actually mean though?
So when you're using divergences with indicators, normally what you use is that since you have an indicator that's showing momentum and you have price that's showing the actual price movement, you're trying to see if there's anything that differs from the two, right? Normally these are found on retests. So after the initial sell-off, you have another retest of the lows. Sometimes the lows can be higher, sometimes the lows can be actually lower. And you have to see whether or not the next retest, in terms of the momentum that's happening, is the momentum still the same as the previous sell-off?
If you mean the momentum is slower, then the divergence is happening.
Yeah. So example, if the support level is 5, you sell off significantly into 5, and then the retest happens, and it happens again at 5, but the underlying momentum indicator, whatever it is, if it's MACD or RSI or stochastics, is showing you something that the levels are higher at this on the retest, it means that there's a divergence coming from that point. That goes to show that there's a potential underlying strength that's coming into the stock, and then you might actually see some semblance of significant rally from that point.
So the question is the selling over when you see divergences?
Normally, for that leg of magnitude, it's normally over. It doesn't mean that you won't find a duration that can come into place, and then further sell-off can come.
Okay, so there's still a possibility that after divergences, you can still see a massive sell-off after.
You can, but it'll, in terms of the initial leg of magnitude of that point, normally that sell-off is done. So then you're going to see a semblance of rally. Whether that rally means that it's going to be a significant rally to the previous highs, or it can be a form of duration where it will stay sideways or rally a little bit and then create a 4 to 6 week duration and then break down from there. So that can actually happen regardless of whether there's a divergence or not.
Okay. So how would you know if today's market is already going through irrational selling or not?
If you actually look at the PSE today, it's actually in a very orderly downward channel. And that means that most of the selling that's happening and most of the rallies that are happening today are all rational people who are participating in a rational environment. It means that they expect that prices will only rally to the resistance level. Once they see it, the sell-off continues to come. And what normally you have to really look at is whether or not there's any extreme on each side of that downtrend channel. That means that if there's a sell-off in excess of the low end of that downtrend line range, it means that this could potentially be a form of irrational liquidation. And we normally call that exhaustion. So that's something that we're really looking at, and we want to see whether or not that those things can happen before we want to actually come in and start buying share prices.
When those exhaustion days happen, is it volume? Is it accompanied by volume?
No, always accompanied by volume. It means that there are those people who just can't handle the losses anymore, and they'll be selling it at any price whatsoever. Normally, what happens is that if you have any selling pressure, people are still rational. They're still trying to see, okay, if it rallies, I'll sell it at this price. If I make back this amount, I'll start selling it already. But at those junctures where irrational liquidation comes, when they're looking at their portfolios, they will say, "Nah, I can't handle this kind of loss anymore. Just get me out, and I just have to sell at any price whatsoever." And those are the ones where irrational liquidation really happens. So normally we always say, "Nah, those who are we always buy at the top, we always sell at the bottom," right? And it's because when we're selling at the bottom, it means that we just can't handle it anymore, and that's why we always have to puke it out at the very bottom. And after that, prices go up already because of the lack of sellers.
Okay.
Yeah.
So is it both local and foreign?
It's both local and foreign. So the ones that are initially burst of selling is the foreign funds, and then at the very tail end of it, it's the local guys that'll just puke it out at the very end.
Yeah.
And those guys are the ones that we're probably trying to hold it at 8,000.
Correct.
Or 7, 8.
The one trying to bargain hunt.
The one trying to bargain hunt are the ones that are going to be the ones that'll puke it out at wherever that low can be, right? So the one that we initially looking at is 7.2, right? So at this stage, though, that's still the number that we're still, I think we're still looking at. I don't want to say that
whether it will
or will not happen, but in terms of the actual value of share prices, I think 7.2 is something that if it go to 7.2, you have to be heavily open-minded to opening your wallets to see if there are bargains on share prices already.
As a trader, would you be looking to participate in these areas or waiting for it after all of this to finish?
As a trader, the best way to enter is really through a retest. So normally, we don't really have to buy the very bottom, right? If you're looking to buy the very bottom, any sell-off could be the very bottom. That's the biggest
You only know the bottom after it's done.
After it's done, right? So as a trader, the best way to enter is really through the retest. And there's always going to be a retest because everyone's losing money at this stage. It could be a higher low retest, but if you're looking for entry points, no question retest is the best way to look at it because the retest is your signal to say that magnitude leg downwards is done. And since that downward magnitude leg is done, it means that either you're going to go sideways or you're going to go up, right? And from that point on, it means that you're actually closer to the bottom than you are to the top. In terms of saying we're at the bottom already, nobody really knows, right?
All right, guys, there you have it. Don't be scared. We have a long way to go. Last time it was long.
Yep.
Now it's becoming shorter, but still long.
Yep.
I feel like every day is still a difficult day. But don't worry, guys. It's closer to the bottom than we are to the top. So hopefully we can see some form of substantial rally happening in the short term.
See ya. Good
Thanks,
luck.
guys. Have a good day.